All right, now we're going to talk into pattern trading, and talk about trend trading. So those two chapters right here. Oh yeah, share my screen here. All right, so with pattern trading, there's so many different types of patterns, and I'm going to dive into the 12-hour pattern. You have 24 hours in a day, cut that in half, 12 hours. From 7 in the morning, or for those of you that are in Eastern time, 8 in the morning when New York opens, and then up until 8 p.m. And if you're on Central time, I'm basing off of Central time because that's where I live. On that time zone, from 7 a.m., New York opens for my time, and then from 7 p.m., Tokyo, an hour after Tokyo. The reason being is because the US dollar on your mobile MetaTrader 4 app, the US dollar, you can't trade the dollar until 7 p.m. or 8 p.m. if you're on Eastern time. And it's very crucial to pay attention to this 12-hour pattern, because usually every 12 hours things just switch around. Now, I'm not saying that this happens all the time, but most of the time it does this. And sometimes, and I talk about the 7 a.m., the 1 p.m., 7 p.m., and then 1 a.m. And so if you are on Eastern time, you'd be paying attention to 8 o'clock, 2 o'clock, 8 in the morning, 2 in the afternoon, 8 at night, and then 2 a.m. And so when you bounce it every 6 hours and bounce off the 4-hour chart, then you get that 2-hour window between, and you can see how the trend and the pattern are constantly either going to follow for the next 4 or 6 hours. If not, then they're going to drop back. And so that's one thing to take a look into. And it's very, like I said, it's only really precise when we have a week of no economic news, not a whole lot of economics coming out, and also like when there's less news in that week, because then when it consolidates for that long, eventually the next session or the next couple of sessions, it's going to try and break out of it, and that's what it does. So I want to dive into, let's see here. I know you guys can read all this, so let's talk about this. Airports run this time as well. It's very important because international airports have, every single one of them have a foreign exchange currency service. So if you look at those times that I talk about, look at the international airport times. Think about all the people that are flying out. Think about all the people that are flying in. And that's why you get to see these major shift in the value of the currency. It could be euro, could be the pound, it could be USD JPY, could be USD CAD, USD Swiss franc, or Australia or New Zealand. So something to look into from there. I'm not saying look at every single international airport and see which one has the most exchanges. No, that's not what you should be looking at. And let's see here. Let's see, unless there's red news for euro and GBP versus fixed. Oh, because I'm talking about London sessions. I'm just trying to run through here with you guys here. Yep, any pattern can shift due to the red news, which is true, and unexpected events such as, could be Trump hyping up political speech, or a natural disaster, or a terrorist attack in the UK. I mean, you have to be really you have to be ready at all times, especially when you're following a pattern, because patterns can shift due to economic events, like any high impact news. But most of the time, it's during New York sessions that starts that pattern to shift, like a reversal. And then also, if there was a huge like political event also as well. Also, the natural disasters is huge, and terrorist attacks. Even an act of war is huge. So if Trump were to announce, hang on. All right, let's finish what I was talking about here. So yeah, political events, natural disasters, act of war, unexpected events. I mean, these are like unexpected events that will cause a major turnaround and change the trend and change the pattern real quick. And so by like I said, by sticking to the by sticking to the pattern, especially when Sunday starts, because you want to pay attention to what happens within the first couple of hours of Tokyo, not Sydney. You always want to pay attention to what happens in Tokyo. Whatever happens in Tokyo usually ends up following for London. London usually follows Tokyo. If London's not going to follow Tokyo, you have to understand that London's going to try and switch it up and then get ready for New York. So when the if for some reason London doesn't switch up, like if London doesn't switch up, its trend is going to follow Tokyo sessions trend. So let's just say if the dollar was falling all night and the dollar doesn't do a retracement for that session, like to go back up, then the dollar is going to drop even further for that session, which is London. If it drops for 2 sessions, you have to expect that for New York, that they're going to jack up the dollar. They're going to raise the dollar up for New York. That's your pattern right there. And then just keep following that pattern until either Wednesday or Thursday, because Wednesdays and Thursdays, there's those unexpected political events, and there's high impact news. And guess where it's always usually during New York sessions. Can't stress that enough. And so you don't want to mix match the trend and the sessions, because otherwise you're going to be losing a lot. And so it's very, very important to not get caught up on this. And by paying attention, like I said, I highlight this right here. Don't forget to look at the US dollar index chart, at least 3 to 4 hours to be on the safe side. And, trend should be followed at times unless you want to scalp against the trend on a retracement for a few pips, like only 3 to 6 pips max. If you really want to scalp against the trend, then that's on you. But I don't ever try and scalp against the trend. I don't do that anymore. If you want to, you have to be very precise on your entries, and you have to know that you're just catching less than 5 pips. I have to be honest, less than 5 pips will get out anyways. Unless like it's high impact news, then yes. But other than that, I mean, you don't want to get yourself caught on the trend. And we'll hop into price action trading, resistance and support price levels. And let me pause this. All right, price action trading, resistance and support price levels. Let's get into this. So I'll be pausing in and out. We've been doing a lot of pausing in and out, and then switching from chapters to chapters. So just remember that when we talk about crypto, and then I hopped into that investing in crypto. But now let's get into price action trading. The reason being, price action trading does tie in with naked forex, because you're just basically just following support and resistance. You're following the last couple candlestick structures on the wicks, the doji candles, the bullish pin bar, the bearish pin bars on the candles, where it's like, where the candlesticks is going. And then remember, candlesticks are on a price. And so you have to understand that it creates, whether it's a resistance on top, then you know that you're going to sell it. And then if it's a support price or two candles on the bottom, when it bears down and then the next candle becomes a bull candle, so bull is back up, so that's your support right there. Same thing if it was, bulling up and then the next candle is a bear and goes back down, then that's your, that's your sell, that's your resistance. What I highlighted here, also aligning the wicks can be counted at resistance and support if they are exactly priced out when the candle is closed. So when you have two wicks and they match up, that's like two pin bars. And whether it's the two wicks lining up at the resistance or two wicks at the bottom lining up, those can be counted as support and resistance as well. And I only use that very rare, in a rare case, if I see that and it outlines perfectly, and you would draw your horizontal line towards those pin bars off the wicks. So that's something if you want to look into. Let's see what else I want to talk about for price action here. Not a whole lot, for this, because when you hop into naked forex, and I know I explained a lot about why I'm going back to why I'm doing naked forex, is because if the candlestick structure already creates a trend. That trend structure is going to create that price structure. I'm talking a lot about structure here because the structure is the most important thing, because every structure has a level of prices that it needs to be broken or that's going to consolidate. Once it breaks out of that structure, then you're looking for the new structure. Every structure has its own price. You have to remember that. Every structure has its own price levels, whether it's a resistance, support. If you're following an uptrend, then you need to have your price targets for the next resistance, or at least three top resistance prices if you're following an uptrend. And I would recommend looking at the 4-hour, daily, and weekly, and even the monthly. Because if it goes that far up, and I can talk about this, especially looking at higher time frames from the 4-hour all the way to the monthly chart. Reason being, you want to price everything out correctly so that you don't get yourself caught if you were following an uptrend. If you were following an uptrend and you're just strictly just looking at the 4-hour chart, you need to zoom out, look back at the previous highs and previous lows so that you don't get caught up and say, oh, well, I think it's reached its resistance, so I'm just gonna sell because it's probably gonna drop off. When you think it's gonna drop off, it'll probably end up just retrace down a little bit and then bounce off the mid price, and then just even go even higher and create a new leg going back up even higher and create a new higher high, and then you're gonna get yourself caught up on that. So it's very important not to get caught up on just following one resistance price or one level, one support level price. You have to make. I always set three for the uptrend and 3 for the downtrend, no matter what. And it's usually based on the daily and the weekly, because when you're on the 4-hour, if it's on a massive downtrend and if it's on a massive uptrend, you have to be prepared that they're going to shoot it up higher and higher, or they're going to shoot it down lower and lower. And you never know what to expect for the whole week. So you have to look at the daily and the weekly so you get a really good, strong indication of where prices are headed for the whole week for Forex trading from Monday through Friday. And that way you're not second guessing, oh, well, I think it's gonna, I think it's done going for the trend. So it's gonna come back to where it fell, or it's gonna come back to where where it went up. And so you have to look at both ways, but always make sure that when you're on, if you're on a lower time frame, look at the higher time frames so that you can draw your structure, and that structure is your next trend to follow. And if it's not going to go that way, then look at, look at where prices are going to go in case of the next day. If there's high impact news, if there's no high impact news, then you have to be prepared for unexpected changes from unexpected political events or unexpected news events that's going to come out for that pair. And so it doesn't matter what pair it is. You just have to be ready, because if they were driving, if they were driving and pushing that trend for 2 days in a row, you have to expect at least on the third day or the fourth day of the week, they're going to send it back down pretty hard. But it's not going to be like, it's not going to eliminate the trend. It's just going to be like a massive retracement or a massive pullback going back. And so, like I said, you have to remember, if they shoot the uptrend on any pair, I mean, you have to expect that on either Thursday or Friday, they're going to send it down, because it's been up since Monday or it's been up since Sunday. Then you have to expect that, okay, well, there's going to be a massive pullback coming in soon. So you have to expect that at all times, especially when you're swinging on that trend for so long. And you have to understand that when you swing for that long, you know your price targets, and you have to understand that for every 3 to 4 hours, there's going to be some pullbacks, there's going to be some retracements, but it creates that structure on the uptrend or the structure of the downtrend, which trend you're talking about. So I'm talking a lot about trends here and structure, but with the price action, you want to make sure you have your price target set and that you're not second guessing yourself on the price. Because if you are, you're going to get yourself caught. Remember, the higher the time frames, the stronger the resistance and the support is. I'm going to say that one more time. The higher the time frames, the stronger the resistance and the support levels are. Just being honest. So, let you guys know that right now. Let's see what else. Economic news. Oh, economic news. Another very important chapter. You have to really dive down, trade every single high impact news to be at the level where I'm at. I mean, just being honest. A lot of people are asking me Kou, how do you trade with high impact news? How do you know that it was gonna go up? How do you know that it was gonna spike down? How do you know that it was gonna spike this way? How do you know it was gonna whipsaw? Very important to trade every single high impact news. Let's be flat out honest. You have to trade every single high impact news. When I lost my 26K on non-farm payroll, it was not because of non-farm payroll. Non-farm payroll is positive. An hour after Fed Chair Yellen was speaking, it was March 3rd of last year, 2017. She was speaking an hour after NFP was released. As soon as she spoke, I strictly put a 20 standard right when she spoke, and it immediately fell, and I was negative 13,000 right away. That just goes to show you how much you can lose with just the Fed speaking. And from that day, I lost 17,000 that day, and then on Monday I lost the rest of the money. And you have to really dive down and look and say, okay, because it was on USDJPY. USDJPY, I was like, man, I was looking at it, I was like, man, I think USDJPY is gonna hit 115. Never even hit 115. It spiked up to 114.9, and then it just dropped when her speech started. It dropped more than 100 pips. Went back down 113.7, 113.6 at the end of at the closing of Friday. And it's a very hard lesson to learn that when you trade these high impact news, if they, let's just say this, there's two high impact news, like the Fed is speaking in the afternoon, and we have ADP employment on Wednesday, right? I'm talking about non-farm payroll week here. I want to talk about non-farm payroll NFP week because it's a very crucial week. Anyways, the first week of the month. So, for some reason, there's a pattern in this. We can dive down to this. There's a pattern. When you see positive news in the morning, I just don't know how to explain this, but when it's positive news, let's just say ADP employment was positive in the morning during New York sessions, the dollar's going to jack up. But remember, Wednesday, the Fed, from the first week of the month, the Fed's got to release their monetary policy statement and to see if they plan on raising rates. So if they don't, like I said, if they don't, which they usually don't anyways, send it back down. It goes back down. It just ends up being a short, which is weird, but it does. It ends up being a short. And I'm just like, what the heck? Like, and I didn't catch on to this until at the end of summer. You know, I was testing every single high impact news. Speeches are hard to predict. You have to wait at least 3 to 5 minutes. Depends on how the speeches go. Doesn't matter what speech it is. It could be the Governor Lowe's speech for the Reserve Bank of Australia. It could be Governor Orr's speech for Reserve Bank of New Zealand. It could be Mario Draghi's speech for ECB, Euro Central Bank. Could be Bank of England Carney's speech. It could be Jerome Powell speaking. It could be, any of the Fed FOMC members speaking. You have to remember that the FOMC members don't really drive the dollar as much as the Fed Powell speech. Remember, Fed Chair Powell, he runs the Fed, the Federal Reserve. So his speech is much more important than all the FOMC members. So you have to remember that. Trump runs it. Trump, whatever he says, Trump will just drive the news. I know it has nothing to do with economic news, but you have to remember, like, when Trump is talking, it's like, it's haywire. And I got into a habit of reading news articles from fxstreet.com, investing.com, Forex Factory, Daily FX. I mean, you name it. I was reading up as much as I could because I wanted to hear their opinion. I want to see what everyone else's opinion was based on their economic. They're economists. They're like the top economic people to listen to because they have a master's degree in economics and they've been trading for 12, 15 years. But you know what? Some of them don't even trade at all. Some of them are hired as economics. That's it. And all they do is just talk about economics. That doesn't mean that they're a trader. When you, like I said, when I started diving into and listening to them, and they weren't, and they would say like, well, we see good data coming out for U.S. for non-farm payroll, and I'm like, well, if they're saying it's gonna be good numbers, I'm gonna buy it. Don't ever buy into their opinion. They are only like 10% correct, so that gives you a 90% chance of winning. 90% chance of winning if you go the opposite way. I'm just being flat out honest. It's okay to take a 10% loss. If you were to take every single high impact news, I'm talking about the data, not the speeches, not the speeches at the conferences, but the data, interest rates, GDP, retail sales, consumer price index, producer price index, good orders. What else? What else? I can't think of anything. But you guys get what I'm saying. And any data that comes out. Could be manufacturing data for GBP or the Euro or Australia, New Zealand. Like I said, it could be, like I said, retail sales, consumer price index, gross domestic product, producer price index. I mean, when you look at every single economic data that comes out with numbers and they're projecting like either good numbers or bad numbers, if they're projecting good numbers, let's say this. Let's just say for non-farm payroll, they're projecting, 200,000 jobs increase. I am not following what they're saying. No way. I would sell it. And if you've actually looked at my last non-farm payroll video, it was a sell. There was no point buying it. There was no point buying the dollar. Everything was bad for the dollar anyways. And so you have to understand that if you buy into their opinion, you are going to lose all your money if you buy into their opinion. I lost so much money listening to their opinion and buying into their opinion, and all of a sudden I'm like, you know what? Whatever they say isn't working out. And then all of a sudden they'll release like their aftermath or the post-conference news of saying, oh, we projected the wrong numbers, or they'll say, oh, the data was wrong, or they're saying, oh, we forecast the numbers to be wrong. I'm dead serious if you look at the post comments. And that says a bold statement. They're getting paid to just talk about their opinion. I don't care about their opinion. You need to trade every single high impact news so you get to know where things are going to shift, where the reversals are coming. Reversals are high impact news during New York sessions causes a lot of reversals and a bunch of retracements. New York sessions is the most volatile session for any high impact news. It's not Tokyo, it's not London. Have to remember that. New York session, the dollar runs the markets. And so by trading every single high impact news, you're gonna get to see, I'm telling you, you're gonna see the spikes. I always trade with like 10-15 seconds before the release of any high impact news. 10 to 15 seconds, unless it's like a speech panel, I just sit and wait. Unless it's Trump speaking, then it's different. But you have to be ready. You have to be ready when it's high impact news all the time. And I can't stress that enough. I mean, you have to trade every single high impact news. I don't buy into any of the chief financial analysts' opinion. I don't care what FX3.com's got to say. If they say it's going to be good, I'm selling it. If they say it's going to be bad, I'm buying it. I mean, that's the most easiest way to go off of. You can use the 1 minute chart to look at it, which I do. Now with the 1 minute chart, it gets a little crazy. So, within the last 5 minutes before it gets released, those candles are going up and down, up and down, up and down, up and down, up and down. And whatever the last candle does before it gets released, like if they push that candle down pretty hard, it's going to spike up. If they push that last candle up so high, it's going to spike down pretty hard. Just the way I see it, based on the 1 minute structure. You don't have to use the 1 minute candle, the 1 minute chart, but I would suggest taking a look at it before like a couple minutes before the news comes out, and you'll get to see the anticipation. It's not the candles anticipating, it's the people anticipating the buying and the selling before it comes out. And so that's something to pay attention to, especially if you want to hop in, test it on a demo account. Don't be doing live. I mean, you can if you want. I learned it the hard way, but I want you guys to learn from my mistakes here so that you guys are not repeating the same mistakes that I did in the past. I'm speeding things up here. Let's see here. You want to focus on the outcome. You really do. If you don't focus on the outcome, I'm telling you, you're going to focus on just entries. I don't care about the entry point. It doesn't matter about the entry point. What matters is are you going to make the money? That's what comes out. Or can you make the money off this news spike? If you're not, there's no point. And if you're not comfortable, set a buy stop and a sell stop order. If you're not comfortable doing that, wait till it spikes and then get it on the retracement. You can do that too. It's very important. I mean, I use the MyFX economic calendar, but the MyFX economic calendar counts down by the seconds. It's the only one that I know. I mean, I did not. I tried investing.com's economic calendar. It doesn't count down by the seconds. FX Street's calendar don't do it. Forex Factory's economic calendar doesn't count down by the seconds. When I saw MyFX book, the MyFX book economic calendar, and it counts down like from 1 minute to 59 seconds all the way down to like the very last second, like 1 second. You don't want to wait to the 1 second mark, and you don't want to wait for 5 second mark. You want to get in when it's like 20 seconds down to 10 seconds. That's like the best time to get in. That's the best time. So that's to me, that's the best time for me to get in. And then boom, like right at the 3 or the 2 second mark, before it hits the 1 to 0 mark, you'll see the spike. If you wait for it to hit down to 1 second and enter, you're already missed out because it's gonna spike before the 1 second. So that countdown is delayed. The countdown is delayed for the MyFX economic calendar. You have to remember that. So that's another tip to get if you want to get in, at the very last couple seconds. I don't recommend it, but if you want to be at the level of where I'm at, then yes, trade it on a demo. It does the demo, so you can do 10 standards or 20 standards or 100 standards, and you'll see the news spike. Now you have to understand that not every high impact news is gonna set a news spike. So sometimes speeches don't do anything. Sometimes conferences don't do anything. Sometimes, what else? Sometimes like data, some of the economic data that gets released doesn't do anything. And it is what it is. I mean, you can't expect spikes all the time, but like I said, throughout the whole week, you will see some good spikes with some high impact news. And the one currency that has the most high impact news will be the one that moves the most in pips for the whole week. That's it. Because you're gonna catch the most pips, you catch the most profit, right? So that's something else to pay attention to. Like I said, don't buy the rumors and the hype. I mean, you don't follow what someone else is saying. You gotta like do your own research on this. Investing.com is a little, this is how it is right here, where if you click on the speech, and you can see like all the speeches that were done for him. DOJ Kuroda here. Let's see what else. Forex market time converter. This is something interesting for those that don't know how to use or don't know how to convert their time zone to the foreign exchange market to know which sessions are open. So this is a pretty good website. Forex Factory is another good site as well. Fundamental trading. I mean, the 5 key things: interest rates, employment, economic growth and trade, geopolitical events, acts of God, and commodity price. And so this is a very important topic that ties into economics, economic red news. And if you, like I said, if you just read this chapter and you go back to, my economic red news training, my economic red news trading chapter, I mean, these 2 chapters tie in so well. And I mean, you don't really have to like dive in and like know exactly like what GDP is, or you don't have to like, really dive in and look at, what interest rates are, or, what employment is. You don't really need to know like the full term definition of that, because that doesn't really pertain into Forex trading. But keep in check of all data for the whole year and what happened last year, previous year, and what's going on currently. That's the most important thing I would recommend, because you have to be prepared for the future, because you want to get good at, guessing and predicting for the upcoming events and the upcoming prices and the upcoming structure of the trend. You have to, because if you don't, you're gonna miss out. You're really gonna miss out. And so that's very important, and you don't want to be, you really don't want to be like, oh well, I don't think, I don't want to trade bad news, so I'm gonna skip this chapter. That's fine. But eventually, when bad news or unexpected political events or unexpected news events that happen to the markets, and you're wondering why it spiked up or spiked down on a random time frame, you have to understand that it was based on unexpected events. And so this is something to remind yourself that you don't have to focus on fundamental trading if you're really just 100% focused on technical analysis, but I'm more on fundamentals and economics than technical analysis. And now since into naked forex, I don't need my technical indicators anymore. So you can see that I'm less technical now, and I'm more focused on the drive for the economy, for the political events, and for unexpected changes in the markets based on fundamental structures. And that's another important thing to look at when you get done reading these two chapters. Test it on demo, trade every single high impact news, read up on the news articles, and you'll get to see, you get to see their points of view, but you don't want to dive into everything on their points of view. So that's another thing to take a look into. Yeah, understand that political events will win over any economic calendar events, no matter how good or bad the outcome of economics is. That is true. If let's just say this, like let's just say non-farm payroll was bad, and they shot the dollar down, and then all of a sudden Trump or an unexpected political event drives the U.S. dollar back up. That political event will overkill or override the non-farm payroll event. It wouldn't matter. I've seen that happen a couple of times during non-farm payroll. I saw that last week. Non-farm payroll was bad. They shot the dollar down. They did. When the overlap of London was done, then they shot the dollar right back up, and they shot the dollar even higher. And it was based on, I forget what Trump said, but Trump said something on Friday. So very important to pay attention to. And especially on Fridays, you have to prepare for those unexpected political events. You have to. And so, let's see here. Let's see what else. Yeah, you have to understand that the trade wars and the tariffs that came in from Trump and back in April and up until now, last year we didn't have that. Last year was a little bit more simpler to trade. This year, this whole trade wars has been affecting the markets every single day. And it's tough. We're in the summertime, so the summertime is not the best time to swing anything. And you're stuck in like a time frame of, what to look for and what to wait for. And so trade wars, it's geopolitical tension. Is just another act from Trump. And I mean, there's nothing that we can do about to change the circumstances or the roles of the trade wars, because the trade war is a huge issue, and it affects the economy, not just for the U.S., but it affects every other country that was affected by the tariffs. And so even though that GDP was 4.1 for United States, doesn't matter. The only reason why GDP was 4.1 is because of the tariffs. Wait till the tariffs gets taken off. The dollar's gonna decrease in value quick. So it's something to pay attention to. But like I say, I don't see the trade wars going away until maybe the end of fall. Maybe the end of fall, if not next year, beginning of next year. So that's just my personal opinion where things are headed for the trade wars. Technical analysis, reading charts and time frames. Like I said, my full technical analysis is on Naked Forex now. Start with the 15-minute chart, work your way up to the daily and the weekly and then the monthly, but work your way from the 15-minute to the 1 hour and the 4 hour, because with the 15-minute structure, when prices are consolidated on 15 minutes and then you see a massive breakout, then yes, if it's a massive breakout to the upside and breaks that resistance, then you are looking for that candle to close above that resistance price and then shoot up to the 1 hour and then shoot up to the 4 hour for that session, because you want to ride that trend out. That's the most important thing. And you have to pay attention to those key support and price levels for each time frame all the time. That's just like a quick chapter analysis here, because I'm more focused on Naked Forex. I don't want to dive in too much in technical analysis. And eventually you're gonna find your own technical analysis. I mean, you don't have to use Naked Forex. You could just strictly just say, well, I like the RSI, I like the stochastic, or I like the Bollinger Bands with the 10-day moving average when they cross over. I would say that the crossover of two moving averages is much more effective than following the RSI or stochastic. Hands down. I mean, that's the main window is the best window. That's all it is. Not the bottom window with a bunch of oversold and overbought condition on indicators. That's not what you should be following. So, just like I said, just something to really dive in and focus on your own technical analysis. So this is just a brief, like I said, a little short brief chapter. Like I said, I don't use Fibonacci. I don't use trend lines. I don't use ABCD patterns or any of those patterns. I don't use harmonic patterns. What else? Yeah, I mean, it's just something that, when you define your own analysis, and you're gonna find out, okay, what works for you and what doesn't. And this is just a basic reference off the chapter, so I don't want to say you should go Naked Forex for me because I'm going Naked Forex. I would recommend taking an indicator off one by one if you want to go Naked Forex, and then slowly take everything off and then work your way from a smaller time frame to a higher time frame on Naked Forex if you choose so. If you like I said, if you like the RSI, you like the MACD, you like the stochastic, you like the Bollinger Bands, you like the two EMAs crossing over, that's on you. And so it's something that you have to understand, that once you dive into technical analysis, reading the charts and understanding your time frames that you like, you got to know which time frame you like the most, and you got to know which indicator you like the most, and then from there put it all together. And if you don't like indicators, you can go Naked Forex and start with the 15-minute chart, and that's the most easiest way I can say it. And like I said, right here, for me, I like the 4-hour chart for swing and the 1 minute for 1 minute chart for scalping, because that's what I was using back then. But right now, I would say the 15-minute. Let's see here, the dollar chart. This chart was last year. I know that. This is a very important chart. I predicted for this to go up. It did. Remember, the dollar was down. I wonder if I can zoom in. Can I zoom in? I want to zoom in here. Page 76. Let me zoom in. This was, yep, look at this. This is my prediction. And it came out pretty good. I was basing off of this because it made that little cross right here. It was outside the band. And I was like, you know what? I'm going to predict for it to come back here. And let's go back. What price was this? Oh, come on. No. Oh, shoot. What price was this? Can't. I want to 96. And this is crazy how I predicted this. It was at 89. The 2 pin bars down here, and plus this one was outside the band coming in. And I predicted to come back to hit 92, 93. It's at 95 right now. 96 isn't far away. If you were to put the Bollinger Bands on right now and put the stochastic on and see where it's sitting right now, it is pretty much overbought. And you can see that the Bollinger Bands are even higher. So, like I said, we could very well see the dollar and the momentum of the US dollar going up this whole year because they sold it last year from the beginning of January when President Trump got inaugurated all the way till the beginning of 2018. Crazy, but it just somehow worked out selling for a whole year, right? Isn't that crazy? For 1 year straight, they sold the dollar, you know, from 102 to 989. And now it's back at 95 right now, and we're in the month of August. We got 4 more months. If we add 1% change, September, October, November, and December, 4 months, and that means the dollar will hit either 99 or close to 100 before being a sell. That's a good way of predicting the shift. And when you get good at that, you can like, wow, let's look at, you know, where this major shift is going to happen. If they send the dollar if they send the dollar down for 1 year, and they're going to send it back up for send up for a whole year straight, send it back down again. I mean, this is perfect, you know, perfect momentum. I mean, it just worked out perfectly. I don't know how they do it, but they do it, right? And everything just plays out perfectly based on political events, not economics, political events. So it's something to remind yourself. Remember, they manipulate the price. We don't manipulate it. And when the banks are involved, you have to be ready for any kind of act. President Trump is just an act. That's just my opinion. So something to pay attention to when he talks. Let's see here. Let me zoom back out. Let's see. Oh, summary review. That's something to take a close reading because you have to you have to dive into what chapters you need to learn more about, what you really need to focus on. I would say the most important chapter is habits of being a consistent, profitable trader. This is a pretty important chapter right here. Tips versus profits. Yeah, that's something you want to read on. Mindset and mental focus. That's another good chapter. A lot of people, I'm going to say this, a lot of people don't know how much time I really spent here in my home office. You know, last year and up until now, I feel like I spent at least 10 to 12 hours here, to be honest. At least 10 to 12 hours. I mean, there would be there would be days like I'll be out with the family, but I mean, I'm barely like sleeping. You know, I sacrifice my sleep time to be at the level where I'm at trading. When you sacrifice whatever it is that you want to do and you're passionate about it, you just want to keep going at it, you're going to make it happen. It sucks that, yeah, you're going to be sacrificing, but you're sacrificing temporarily. You know, sacrifice for 2 years or 3 years straight, but you can have the life of your dream that you really, really want for the rest of your life after those 2, 3 years. I'm not done pursuing what I'm doing. You know, there's so much more stuff I want to do outside of Forex, even though I'm still doing Forex. And you have to understand that, you know, there's more to life than just being a Forex trader. I'm just be honest. The lifestyle Forex, you know, I'll just be honest. The lifestyle Forex is trading part-time, making a full-time income. That's it. How can you do that? I mean, look at this picture. I mean, look at these lot sizes. I mean, this is something that, you know, this is a demo account that I did. And I mean, imagine if you could just do that. That's it. You know, you don't need to like be really crazy like that, but I mean, making 10K a day, 20K a day, 50K a day, you can't do it. And so, I mean, I love Bruce Lee's quote here. You know, the successful warrior is the average man with a laser-like focus. That's it. You know, when you're focused, when you're so focused, no one can take that away. Doesn't matter who it is. When you're focused and you're just in the trenches and you're getting down and dirty and you're making sure that you're not losing anything because you want to dominate. You know, you want to make it happen for you, your family, your wife and kids, husband, you know, boyfriend, girlfriend. It doesn't matter, right? Because your mindset is there, and your mental attitude of focus and being positive, of winning, is going to be there. I mean, I can't stress that enough for anybody that wants it for themselves. You know, the daily habits every day, you're being positive, you know, you give it all you got, you know, you're grinding, you're hustling, no matter what it is. It can be anything in life. And so it's very important. You know, last year when I lost that money, I barely slept for 2 months because I said, you know what, I'm gonna get back and do it again. I never came close to making 26K again. I flipped 4 accounts back to like 8 to 12K and then lost it all on Fridays. So I stopped trading on Fridays because I didn't want to lose any more money. But then I created bad habits trading again on Fridays. So something to understand that your discipline needs to be there. You need to discipline, and you need to know when to discipline yourself. No one can do that for you. You have to discipline it for yourself. No, I can't be like, even when I'm sending out signals, I will suggest people to take profit, but if they want to keep trading for themselves, they can. Don't just trade because you want to trade. That makes no sense. You have to trade so you can make a living, and then when you make a living, then make a fortune. That's the most important thing. Otherwise, you're just gonna end up losing more money. And if that's you, I don't know. I mean, if you want to keep blowing accounts, you can. I don't recommend that. You know, I'm tired of blowing accounts, and that's the most important thing. And so let's hop down here. Budgeting, financing. I mean, that's another important chapter. I mean, you have to dive down and understand how much you're willing to invest, how much you're willing to risk. I mean, how much you can afford to trade. Not your rent money, not your car payment money, you know, not your friend's money that you're borrowing. No. Do not borrow money just so you can trade. No. Do not ask for people's money just so you can trade. Come up with your own money. Put your own money in there, because when you make that money yours, it's yours. You don't have to owe anybody money back. Can't. I mean, you take a loan out, you better make sure that you make 10 times the loan money or 5 times the loan money. That's the most important. I mean, you have to get all you got, especially if you borrow money, because you had to pay them back, and then whatever's left is left. It's the most important thing. So you have to be prepared for the amount of risk that you're willing to take. When it comes to trading, I'll just be honest. There's risk in everything that we do in life. It's not just Forex. So, oh yeah, investing, and we talked about that. And summary, yes. Yeah, this is pretty good. Right? Don't wait for good things to come to you. You want it, chase for it. You want it, work for it. You gotta do it for yourself. And another good thing right here. Limit yourself from self-doubt, self-worth, and self-fear. When you are in control of your own hands and your own destiny, you are in control of your own thinking and your own actions. So if you think to yourself that you can't make it, it's not going to happen. If you don't believe in it, it's not going to happen. If you don't think that you can make this kind of money, it's not going to happen. It's the most important thing. And I highlight this. And always highlighted right here. Whoops. Come on, come back. Always take the first jab before the knockout comes in the game of trading. An example, do not stack right away and expect the trend to keep going when the recession is almost done, and then all of a sudden it retraces on you or pulls back. Let the market play for you and see the entry direction first before stacking too many positions. What I mean by like, as I'm talking a little bit about boxing, right? When you take the first jab, you just want to try to feel that market out. Put a 0.01 lot size. Hedge it out for a bit. 0.01 buy, 0.01 sell. Test it out. Test where the markets are going. Because just in case it is consolidating and you don't know where it's going, put it out there. Put 0.01 buy and 0.01 sell on that currency pair. Test it out. See where it's going to fluctuate. If it fluctuates a lot on the selling side, sell it all the way. If it fluctuates a lot, and then if it moves, you're making like 25 cents, 50 cents. That's 25 micro pips. That's 50 micro pips. Hey, let's get into it. Things are moving over here. Let's buy. Let's sell. And that's one way. Hedge it out first. Don't just be like, oh, I'm gonna take a stab and put in like 10 open positions, and the next thing you know, your 10 open positions are negative, and then you're about to get margin out. That's not a good idea. So, like I said, I talk a little bit about future projections and future trading markets because this is something that you have to think like how the central banks think. Think like the big banks so you can see the next move for yourself. Prices are going against the dollar. The dollar's a sell. How long is they going to sell the dollar? Do we have something coming up? Like, do we have a recession coming up for the U.S. economy? What's going on with the trade wars? What's going to end the trade wars? What's going to happen this year? What's going to happen at the end of this year? What could possibly happen at the end of Trump's term in 2020, right? 2 years from now. You gotta look at that. Big major key events to expect. What is the next major event that's going to happen or that's going to pull down the markets or pull the markets up? Most important thing. Events. I mean, you have to know what major events are going to drive the markets. If you look at investing.com on Friday, they always say the top 5 events that move the markets. That's another good article to read because it made me shift the way, I was thinking towards the markets because you're like, well, I'll just stare at the chart and look at candlesticks. That doesn't really work out because if you can stare at the candlesticks all day, but by not knowing, by not reading, and by not looking ahead of the game, and by not understanding that you have some fundamentals and economic news that are about to get released, and plus you have unexpected political events throughout the whole day, especially during New York sessions. So if Trump decides to do something and he starts throwing a fit on stage on his speech, you have to expect the dollar's going to drop hard, and that's the most important thing, you know. And so, let's see. Yeah, very good. I added some more stuff in here. Charts, self-explanatory. I don't really want to run into every single chart and explain because I typed out and explained a lot on the chart, why I was selling, why I was buying. What else I want to run into here before I cut off? Oh yeah, I actually did put before I cut everything off. I mean, yeah, I put the inverse. Well, come on. I'm sorry, guys. Hang on. Why, yeah, I hate this. Come on. Where is it? Yep, I put this here. This is something to reference off of. Please stay consistent first before you start acting aggressive. Can't stress that enough. It says it right here, rule of thumb. If you cannot simply be consistent and precise on making income on trading, then how can you expect to be a high-risk aggressive trader and make more income? If you lose the whole account over and over again, you will never learn and always repeat the same mistakes, which is very true. I learned that the hard way. I learned that the hard way within the first 6 months. Inverse correlation in Forex pairs, I talked a lot about this. Like if we this is self-explanatory. I'll just say out loud. If CAD news comes out and I expect to sell CAD, then that means I'm selling CAD Swiss franc because CAD's in front. If I'm selling CAD, I'm selling CAD Swiss franc. I'm not buying CAD Swiss franc. I'd be buying USD CAD because USD CAD is the total opposite pair because it's a US dollar first. Okay, if I am selling CAD, it'll be CAD JPY, it'll be CAD NZD, it'll be CAD Swiss franc, whatever CAD's in front. The CAD pair in front is going to be the sell, right? And then I'll be buying USD CAD, I'll be buying Euro CAD, I'll be buying the pound to the CAD, I'll be buying AUD CAD, I'll be buying NZD CAD, JPY CAD. I mean, that's another thing to take a look for. Let's see here. I kind of don't want to run. Let's see. Is that it? Oh yeah, I think that's it. So this is a very long, let's be honest, this is a very, very, very long tutorial. And I'm very sorry for those that are watching, but I wanted to make sure that you guys are getting, you know, everything out of me. And so my next book, I'll talk a lot about this one. I plan to make Forex software, and I'm in a development stage right now. I want to create some new software programs, and so and coding as well. And so going back to school to learn how to code. That's one thing. And like I said, I mean, I'm back on YouTube. We put out a lot more videos on YouTube. I plan to live stream again. If anything, Telegram me. You know, if not, email me. I mean, I'll talk to anybody. So it's not like I'm throwing people away unless you're really bugging me. Then yeah, I'll shut you off. But I mean, yeah, I mean, you can. I don't know what else. Let's see. Yeah, that's it. So I appreciate I appreciate you watching this. If there is something like I said, if there is something that you don't understand from this book, could be something specific, which I should expect. Could be a specific question that pertains to some chapters or my new naked forex trading style, or something about fundamentals, or something about, or if you want to, or something for the future. You have something specific that you want to ask me, like, hey, what are you planning for the future? Then you can ask me that too. So, like I said, I mean, I'm on YouTube. I'll be more on YouTube. And you can Telegram me. I'm not going to leave my Telegram chat group at all. So that my Telegram will always be there. Let's see. I'm not revising the book. I already stated that. I'm not going to revise the book because I plan on making this book fully published by next year. So I really want to publish this book next year. I really do. So I put a lot of time and effort into typing out this whole thing, and I want to make sure that this book actually comes into paper, real life. So I'm really excited for this, and maybe I might revise it one more time to make it more clarified and a little more precise, and update the charts to the 2019 charts that are coming up for next year if I decide to revise next year. So it's very important because by looking at every single aspect of trading, I mean, there's so much more. Every year things are changing. Every day the markets are changing, and you have to adapt to this. I mean, I know some days it'll be stressful. Some days you're overwhelmed. Some days, you don't want to do anything because the markets aren't really going the way you anticipated, and it happens all the time. And so I got killed I got killed in July for anticipating the wrong moves right after 4th of July. I got killed last year in July as well. So now I know that the month of July I shouldn't be trading as much. And I think that'll be my month of taking vacation with the family a little bit more. So, but I mean, you're gonna find your months of trading where you're gonna make a lot of money. Your days that you make a lot of money, those are the days that you need to focus on making money. And then the days that you're not making a lot of money, leave those days to a minimal time of trading, less than 4 hours or less than 2 hours, whatever it is. And then focus on your day somewhere else so that you can be happy and be more positive and be more optimistic versus just trying to drown your brain into trading every day. You're gonna get stressed out, you're gonna get wiped out, you're gonna get burned out. I'm be honest. And so that's it, man. I mean this is it, man. This is the full tutorial of LQDFX second edition. And any questions, comments, or concern, like I said, you can email me, Telegram me, message me on YouTube. I don't think you can anymore, but I mean anything. I mean, if there's something specific, let me know. And I appreciate each and every one of you guys that purchased this book and that have watched the full thing, because this, I mean, not just for me, but this will make you and grow. This will make you, grow you, and you're gonna learn, and I want you to learn from my mistakes so that you're not gonna repeat my mistakes, and you can level up, not level down or downgrade your trading. That's not what I want. It doesn't make any sense, and so it doesn't make any sense to downgrade someone's trading skill sets or to level down on the way you're trading from what you were doing. You purchase this so that you can be at where I'm at, or gain the skills, or gain the knowledge and wisdom or experience from me, and take it to a whole new level. That's what I want. I want you to take it to a whole new level so that you don't have to be bugging me and be like, you know what, I didn't learn nothing. This book is shit. I mean, or my tutorial wasn't worth it. I want to make sure it's worth it. So let me know. And I wish you guys much success. 2019, 2020, be ready. And like I said, you gotta be ready for the markets. Every day is different. Every week is different. Every season is different. Every year is different. Yeah. So other than that, I mean, have a great end of the have a great 2018, and then have a great, future of success in trading. So there you guys have it. So that's all I got.